Hello everyone. In this session, we will discuss about concept of scaling. Now, scaling of y-axis to be precise. Believe me guys, this is one of the most important concept to understand and learn. Most of the technical analysts, they make mistake in scaling, and because of which they may get different result, or they may get signals little bit late or early depending on scale they choose. If you use right scaling, your analysis may improve dramatically. Let me show you what I am talking about. On any technical analysis chart, x-axis represents time and the y-axis represents price. Here, price is in rupees term. On any chart, normal scaling on the y-axis is arithmetic scaling. Unless and until you change the scaling to log, default form of scaling is arithmetic scaling. Now, what is this arithmetic scaling? In this, y-axis is divided in terms of amount of rupees. In simple terms, a particular distance on y-axis represent particular price change. Let me explain you in a more simpler term. The difference between 1000 to 2000 is 1000 rupees. So if this distance represents 1000 rupees, then same distance will represent 1000 rupees change anywhere on the y-axis. That means this distance between 1000 to 2000 will be exactly same as distance between 9000 to 10,000. Correct? So a same distance represents a particular change in price. Now, what is the problem with arithmetic scale? If you go on the longer time frame, if you are a longer time frame trader or investor, okay, and you are analyzing monthly chart. So have a look at this. This chart is from 1991 or before also, correct? Till today, 2021. What is the problem with this chart? What is the problem with this arithmetic scale? Let me show you. Have a look at this. This is on 1st of Feb 2000. What is the price? Let's check data over here. On 1st Feb 2000, open was 1546, close was 1654. Okay, 1654. Then there was a downtrend, and have a look at this. This is 3rd September 2001. What is the close? 913. That means from 1654, price moved down to 913. That means it is round about 40 to 50% down move. I'm talking about 50% down move. Yes or no? 40 to 50% down move. Now, have a look at this over here. Okay, let's check this. Okay, let's check this. Here on this day, on 2nd of December 2019, close was 12,168. And after that, there was an amazing, much famous Corona fall. And in the month of March, close was 8,500. That means, have a look at this again, roundabout from 12,000, we on the closing basis, we were at 8,500. And if we take the lowest point, we were at 7,500. Okay, 7,500. So almost 33% or just more than 33% downfall. Getting my point? Getting my point? On the closing basis, it is below 33%, but let's take it 33%. It is your 33% downfall. Here, this fall, 2000 ka fall, this is your dot-com bubble fall. This is 50% and this is round about 33 to 35%. Tell me guys, which fall is bigger visually on this chart? If you see visually, Corona fall is bigger because numbers are bigger. But if you see data wise, then this fall is bigger. So in arithmetic chart, due to these numbers, charts get distorted and they start giving wrong information visually only. And most of the technical analysts, most of the participants, they see and that's it. For them it is enough, correct? But this fall in terms of percentages is lesser than this fall. So whenever you see exponential move at that time, if you use arithmetic scale, it will give you wrong information when numbers become large, when numbers become huge. Okay. Now, what is the solution? Use logarithmic scale. At the bottom, have a look at this. It is log written over here. Just click that. And guys, suddenly you will see a right representation where visually also this fall is higher than this fall. Getting my point? Why this is happening? Because in logarithmic scale, y-axis is divided based on percentage price change or percentage price move. Let's simplify this. This price is 900, let's say. If price move from 900 to 1800, so percentage price change is 100%. So the distance which represent this 100% price move, same distance will represent price move from 7,500 to 15,000. It doesn't matter what is the absolute price change. That means over here from 900 to 1800, absolute price change is 900 rupees, but percent price change is 100%. But in 7,500 to 15,000, absolute price change is 7,500. But for logarithmic scale, it is 100% only. So the distance on the y-axis for this 900 to 1800 change will be exactly same as distance for 7,500 to 15,000 move, because both of them are 100% moves. That's why logarithmic scale is proportional. Here, a particular distance on y-axis represents particular percentage price move. What is the result? The bigger falls in percentages will look visually bigger than smaller fall in percentages. This was not the case in arithmetic scale. In arithmetic scale, what used to happen as we move, let's show you that again, as we move towards higher prices, okay, as we move towards higher prices, even if your proportion is smaller, your fall or rise, whatever that is, tend to look bigger. But in logarithmic scale, where the scaling is based on proportions, getting my point? Proportion of your trend, proportion of your uptrend, proportion of your downtrend. So in the log scale, if your fall is smaller in percentages, then it will look small. If fall is larger in percentages, then it will look larger. Getting my point? Have a look at this here. This fall is from 6,300 to 2,200. Okay, almost 66% fall. It looks higher than this. That's it. Hence, if you use log scale, it gives you better information and right proportion, visual right proportions. Now, people say that for the longer term, log scale is best. Yes, I agree. People also say that if you are analyzing 1 month chart, if you are looking at 2, 3 weeks chart, then it doesn't matter whether you use arithmetic scale or log scale. That is also correct. But we normally analyze with log scale. If you want to choose arithmetic scale for the smaller duration, less than 1 month duration, 2 months duration, we are okay with it. You are not doing anything wrong. But for the longer term, log scale is the most important thing. Now you will ask me why I am so much emphasizing on log scale, because log scale, using difference between using log scale and arithmetic scale will be significant when you try to find out chart patterns, when you try to build or draw a trend line. Let me show you the example. Okay, let me show you the example. So trend line. Okay, so this is our log scale. Let's draw this trend line, guys. Okay, let's draw this trend line. Okay, so on this trend line, there was a break of trend line at 10,645. Okay, break of trend line at 10,645. Now let's go to arithmetic scale. This is log scale. Let's delete this log trend line. Let's delete that. And let's draw a different trend line over here. Now, if you see here, the break of trend line is at 9,300. In the log scale, you are getting trend line 1,000 point earlier. This is just a one benefit. This is just a one benefit. You will find various benefits in identifying chart patterns, in building trend lines when you use arithmetic scale. Okay, arithmetic scale. So guys, hence for the longer term chart, for analyzing more than 3 months, 6 months charts, start using log scale. It is must. Okay, it is must. Now let me show you one interesting point. Okay, so let's delete all this. I want to show you the historic time. So everyone talks about, I know in the month of March 2020, everyone was talking about Great Depression, 1930 ka Great Depression, correct? Everyone was talking about that is going to be the case in the Indian stock market. I'm talking about March 2020 ka time. Okay, so let's see actually that time frame. Okay, 1930. Will it be amazing? It will be amazing. Okay, this is not a log, this is arithmetic scale. Okay, now have a look at this. Dow Jones fell from 29,500 till 18,200. Okay, 29,500 till 18,200. So if we round off these things, so let's say Dow Jones fell by somewhere round about 4. Okay, round about 40%. Okay, Dow Jones fell by 40%. Yes or no? Correct. From 30,000 something to 18,000 something. Okay, it fell by 40%. Now let's go and have a look at 1930. First of all, have a look at this. When we move towards higher numbers, there is no significant information given by lower numbers. Correct? First problem of arithmetic scale. Now this is your very famous 1929 ka fall. At that time, it fell from 384 till 40. 384 to 40. That means almost 85% ka fall. Okay. My numbers may be wrong here and there, but ballpark figure is correct. Almost 85% ka fall. But here, this 40% fall looks bigger than this 85% fall. And hence, let's shift to log scale. Look at this. 90% fall looks way bigger than our current corona fall. Yes or no? 90, this, look at this. This is our 1929 Great Depression fall, 90% fall, clearly visible. Each and even lower values are giving us clear information in log scale than arithmetic scale, correct? And this fall is clearly higher than our current corona fall. Getting my point, guys? And this is the difference. And this is very important difference. Now, why, last reason why you should use log scale? As we have discussed thoroughly in the first set of videos, your chart is nothing but psychology, correct? When we think, when we react, when we absorb information and react, at that time, we react from intellectual point of view and emotionally also. Guys, in emotions also, we react proportionately. If there is a big thing, there will be a big panic. If there is a small thing, there will be a small fear. We react proportionately. So that proportion should be visible on chart also, correct? In arithmetic scale, here, whatever math psychology, whatever emotions were there from the traders and investors, it is not visible. But in the log chart, all those emotions are clearly visible. And hence, from psychological perspective also, log chart is important. Now, small homework for you. Just go to Dow Jones chart and draw trend line and find out when you get trend line breach in signal on arithmetic scale and on log scale. It will be interesting, guys. Okay, it will be interesting. Thank you very much. That's it from my side. If you have anything to express, anything, if you have any suggestions, please comment below the video and let's communicate. Let's build our technical analysis community on this channel. Thank you very much, guys. See you. Bye.